after Dhanlaxmi Bank's MD and CEO was voted by the shareholders at the AGM on the 30th of September, RBI has finally stepped in, and this is similar to what happened in the affairs of Lakshmi Vilas Bank. Now what Dhanlaxmi Bank is saying is that RBI has appointed a 3-member committee of directors. This is an interim arrangement. This 3-member panel is consisted of Mr. S Subramonia Iyer, who will be the chairman, Mr. G Rajagopalan, Nair and Vijayakumar, who will be the members. This committee is going to play the role of an MD and CEO till a new MD and CEO has been appointed. But this arrangement is only for 4 months' time. This committee has been put in place only for 4 months' time, and this is the time given to the private bank to appoint another MD and CEO. Remember, to take you back to what had exactly happened, at the AGM on 30th of September, 90% of voters had voted against the appointment of MD and CEO Sunil Gurbaxani. He had been appointed MD and CEO with effect from 25th of February this year, but the shareholders were not in favor of the top management. 90% voted him out. This is something similar to what happened in Lakshmi Vilas Bank. All the shareholders voted against the appointment of 7 directors, including the MD and CEO. So that just happened a week before what happened at Dhanlaxmi Bank's AGM. Now, what is the reason for the shareholders to oust the MD and CEO? Well, this goes back to the reports that suggest that AIBEA, the All India Banks Employees Association, had written to the RBI citing a lot of issues which the shareholders had with the bank's day-to-day dealings. In fact, AIBEA in the letter to the RBI had sought urgent intervention from RBI. They had said that it needs to be looked into because the business plans that were in place by the bank were not in the right direction. The bank is profitable. It has been profitable for the last 9 quarters. The health of the bank is not an issue at all for the shareholders. But the issue, in fact, is that the plans that the MD and CEO and the top management were putting in place were not something that the shareholders were happy with. Dhanlaxmi Bank is a 93-year-old Kerala-based bank. They want to stay true to their roots. They want to remain a South India-focused bank. But the top management was looking at opening branches across Northern India, appointing more executives, more executives across these branches. But what the shareholders thought was that this would not be in favor of the bank and the situation that the bank is. The bank had previously seen financial issues. They got through that, and now considering it's in sound financial health, they want that to continue. In fact, shareholders also had an issue with how the MD and CEO and the rest of the bank were trying to raise funds. They do not want their money to be diluted, the share money to be diluted, because the share price has already fallen quite a bit in the last few years or so, and they want to retain the share price at that level. So they are looking at a QIP, and they are not interested in what the top management's plan was to talk to funds based in other parts of the country. So this was the tussle between the shareholders and the management that led to them ousting the MD and CEO, and now RBI has stepped in for a 4 months interim committee of directors.